thanks for watching my market report. I am Mike, and this mortgage market report is in regards to mortgages. We want to kind of share with you guys what's on the daily basis, what drives interest rates on a daily basis here, and a little bit about myself as I work with as a loan officer with a national lender. So if you guys got questions about mortgage rates or mortgages or anything about purchases or refinancing, pre-approvals and such, please feel free to reach out. We'd love to be able to discuss how we can assist you guys. Without further ado, let's jump right into the report. No economic reports today scheduled, so kind of a quiet part on that day. Well, quiet part today in regards to economic reports. Stocks are a little mixed. The only one in negative territory this time around is the Dow. It's been kind of the other way around where S&P's been kind of dipping back and forth and Nasdaq's been negative, but the Dow is actually in negative territory today. Now, the reason being is that here's the big thing here today is the Fed's announcement regarding to the SLR. This is the supplemental leverage ratio. We kind of talked about this week. What this is and has a lot of relevance is that back when the pandemic happened, April 1st, the Fed had announced that banks can basically go unlimited. So what on the reserve requirements. So there's a ratio that they can remove treasuries and bonds and stuff from the reserve requirement and allow more lending out there. And right now, they decide they're going to go ahead and let that expire. Many thought they would, as they keep talking about how they're going to keep the economy going, many thought they would go ahead and extend that. But however, they just announced today that they're not going to extend that. So we're seeing an adverse reaction. So who's really being hit here on the stock wise is banks and financial institutions, as they're going to have to probably readjust and go through the portfolios and review how much leveraging they've done. So speaking of such, let's go see how this is affecting the bond market and what's going on with mortgage rates. Mortgage rates are down. MBS mortgage-backed securities are down 14 basis points, so that will translate a little worse pricing as a result of that. So as you can see, we were a little higher, and then when the news came out, it started dropping. It was down a little bit further, but has subsided. It's kind of holding its own a little bit, but still, it's taking a pretty big beating. Yesterday, we had a horrible day. It closed down 42 basis points, so that may be the selling that they were anticipating. That maybe it was bad news, so maybe that's why it's kind of holding its own. It kind of got priced into the market. So let's look at yields. Yields are up a little bit. We started the day off earlier. We were even up higher, but right now we're sitting at just under 1.72 here on yields. So again, this is a situation where investors are not exactly thrilled. They wanted this to be extended, of course, and so we'll have to kind of wait and see. But this could push mortgage rates and continue further up a little bit more rapidly than we probably had normally anticipated as a result. So, all right, again, if you guys got any questions about anything, please feel free to reach out. I'd love to be able to help you guys out. Otherwise, you guys have a great rest of your day. Enjoy your weekend, and we'll see you guys on Monday's report. Bye-bye.